What is up? All right, let's do a little check down. CPI day, and let's just try to. I wouldn't trade a CPI day. I would stay clear of the day. All right, just checking the calendar. Okay, when does it come out? All right, 8:30 a.m. today. We got CPI month over month, CPI year over year. All right, so in case you don't know, it measures the change in the price of goods and services purchased by customers. Actual greater than forecast is good for currency. Okay, and why traders care. Consumer prices account for a majority of the overall inflation. Inflation is important to the currency valuation because rising prices lead to central banks raising interest rates out of the respect for their inflation containment mandate. All right, and now the last one we had was on January 12th, right before Bitcoin pumped, where the actual was negative 0.1%, and it met the forecast. Okay, so we got January 12th and December 13th and November 10th. Okay, so we might go over those. I'll go over those days as well, but let's just check out, recency, what's going on in the past 24 hours, and see if anything's changed. Of course, we got this one as well. This is a huge day. Huge day. All right. So you got year over year. All right. Basically the same thing. Where the actual was 6.5 and the forecast was 6.5. All right. Again, it's come in below the forecast the past two readings. All right, which is very good for markets. Okay. Same thing here. Core CPI month over month met the forecast last time. Has come in negative the previous two times and positive the previous two times before that. All right. Now, do a check down on the chart. All right. In the yearly, we still have a lot of selling going on. Okay. In the past 2 years. All right. We'll switch it back over to normal candles, if you will. Again, in your 6 month, you got your 5 EMA just chilling on top of price. All right. I marked that out here. All right. Your 5 EMA on your 6 month currently sits at 22,769. All right. So that is a huge area for anyone to watch. All right, just know where that is. All right, and in case you were wondering how prices behaved recently, all right, just come back over here. Let's go to your 8 hour. All right, and you can just replay it back and just watch how you get these reactions off of that level, off of that EMA there. All right, and then come back over to your 6 month and just watch how it works. All right. Let's play you as bad boy. All right. So just watch your EMA, right? Your price for the past 6 months, you have not gotten back above this EMA on your 6 month. All right. You've pushed up onto it. Okay. You get a little pump. All right. You'll pump up. Right over it. Bang. Back down. Pump to it. Bang. Gets pushed back down. Okay. You get a little pump to it, bang, push back down. Transactions are happening at speed now. All right, basically that's what your blue vector means. All right. Yeah. So that's your 6 months. So, I mean, that's just a big EMA to watch, at least for me. We got our 3 month. All right. On your 3 month, all right, you got your 5 EMA crossing underneath your 13 EMA. All right, now in Bitcoin's history, again, has this ever happened before? You got to look at those things. So, again, they call these the railroad tracks, your 5 and your 13 EMA. Essentially, you have ridden the railroad tracks up its entire history. It's in an entirety. All right, and on your 3 month time frame, this is the first time they have crossed. And again, you're getting rejections off of that 5 EMA and in that 13 EMA area. So this is a huge area right here where your previous high sits. right, in the macro over these past 9 months, right? So in your monthly time frame, and what I want to stress too is that you got Binance, right? And you can see like it doesn't have the full price history, so the EMAs are not exactly the same. But if you come to the Bitcoin index, your EMAs, it gives you the full history. All right. Now on your monthly time frame, your 5 and your 13 have acted as a big level to be watched. Okay. You have gotten your 5 EMA crossing underneath your 13 EMA. However, your 5 EMA has never come below your 50 EMA on your monthly. All right. The EMAs have always gone above. All right. Where prices come below, but the EMAs have remained above in your past bear market. However, your 5 EMA did cross underneath your 13 EMA. Price did come below your 50 EMA. Your 5 EMA has come below your 50 EMA. And you have spent multiple months below both your 5 and your 50 EMA on the monthly. All right, where you've come up to your 50 EMA once, twice, and now 3 times, and are getting rejected off of your 50 EMA on your monthly time frame, with your 5 underneath there, and your 13 coming down to price action inside of the VWAP at least on your monthly. That to me is a huge red flag in terms of price direction. Okay, you can see it's never ever happened before. All right, price in back in here in 2014. Okay, you got a nice jump off your 50. 2 wicks below, you held it as support. Big runs up. All right. Down here, you dipped below for only 3 months. Only 3 months in the prior bear market, you dipped below your 50. All right, cool. You got a wick down here as well, but you got snapped right back up. All right, big longs we're taking. This is a big red candle. We like big red candles. If you want to buy a candle, you buy a big red candle. Okay. You got a big green candle here. This was kind of bullish. Reminds you of this over here. However, price has remained there for now, not just 3 months, but 1, 2, 3, 4, 5, 6, 7, 8 months below your 50 EMA on your monthly time frame. To me, that's bearish. I mean, you go through this, and again, I pointed this out yesterday on your Heikin Ashis. All right, you have a flat top on your yearly. All right, now whether that's happened before or not, I don't know if things start out like that, in these previous years. I don't know if you can go back that far or if we even replay that. Replay isn't available on the chart in this chart type. Okay, so yeah, that's not a great sign. Okay, but if your Heikin Ashi candles, all right, basically anytime you want to see a trend change, you want an overshadow, undershadow. But your 6 month, you have 2 flat tops, 4 month or 5 month flat tops, 3 month, you're still flat here, but you've made a higher low in the past 3 months. All right, that is, a good sign. Your 2 month has a reversal candle at your 50 EMA. That could be something to note. However, you can see lots of vectors down below, a lot of vector regions. All right, on your monthly, you have gotten the reversal, all right, but you're still getting that rejection, okay? That's the big thing, all right? 3 week, you're still flipped green. 2 week, all right? 2 week, actually, you're sitting above your ketchup and your mustard, all right? You're getting pushed up on. It's positive, all right? Weekly, the death cross, everyone was talking about the death cross happened. Look, if you're using the right chart, the death cross happened back here. All right, happened 2 weeks ago. More than that. Okay, so don't depends on what chart you're using. All right, Binance. Look, it hasn't happened. What about Coinbase? Is this my Coinbase chart? Coinbase. This is the one they're looking at. They're looking at it that it happened last week. But if you use the full price history, it happened even further back than that. Okay. So that is your weekly. All right. Now weekly, you haven't really pinned your 200 EMA on the best chart for EMAs, in my opinion. However, you did pin your 200 weekly on Binance. All right. So you made 2 pins, issued actually more pins over here to your 200 EMA on Binance. Not a good sign, okay? Because again, if you come back to your weekly time frame, people love the 200 EMA. I know they love the 200 EMA. You know, this has been the big buy price for Bitcoin, right? You come down to the 200 week EMA, you get a big bounce. 200 week EMA, you get a big bounce. Here, you've now spent an enormous amount of time underneath your 200 week EMA with a cross, and that is also bearish. Okay, so those are the higher term time frames, the big ones at least, which you should be paying attention to the most. All right, now on your daily, on a more positive note, your 50 is coming up on your 200, but you have not gotten the cross yet. Okay, I know everyone wants to talk about the golden cross and all that stuff. Okay, on Binance, still the same deal. All right. Also, your 800 EMA is sitting above your 200 and your 50 EMA on your daily. Okay. I know when you want to go back in Bitcoin's history here, right? You get the golden cross here, but again, you were at your 800 EMA. Okay. So that was a positive thing. All right. You come back in the history, and again, back in 2014 or whatever, 15, all right, you got your cross. I mean, this is more like the situation you would kind of want, right? Up in here, this is more similar as far as EMAs go, all right? This is kind of like what you're hoping for, but there's 2 situations here as far as the daily goes, which we just went over the higher term time frames, how it's very, very different over time, okay? But, you know, you've come down right about here, right? It looks like you were about to get the cross. You just kind of spiked up to about your 800 EMA. You got a rejection. All right. Now, right now, we've come down to the lows 2 times. So you might say that, you know, this is a little bit more like what's going on, where you can be right about here, right? But I think that this time is different. It's not 2014, 15, or whatever, okay? We have big news coming out today. A lot of money printing has gone on and all that jazz. However, let's go in the lower term time frames and see what's going on the 8 hour. All right, 8 hour time frame. Regular candles. All right, what do we see? We see shorts down here. All right, PVRSA volume. What do we know? Is that PVRSA volume kind of sets up and gives you an indication on contracts or positions that the market makers have built previously that they might be interested to come back to. All right, so in essence, you were sold a bunch of longs, you know, moon boy longs over here. Well, the thing is that when you take a 30x long, right, the market maker has to take a 30x short. Okay, he has to take the opposite side of the trade. So that being said, market makers, the people who control basically the way the price moves, are net short from this region right here. Okay, just know that if retail is net long, market makers are net short. How do you get paid on net short? You correct the market. Okay, knowing what the news is going to be and all that stuff. Okay. Nonetheless, you look like you're rolling over, rounded top. Excuse me, a little sip of diet Mountain Dew. It's like 3 o'clock in the morning. All right. All right. So again, as far as like levels go, it looks to be as though you have basically a level 1 here, right? So we went over this yesterday, I think, where you got a level 1 rise, you got a level 2 right about in here with multiple hits to the high, where we have selling, selling, buy, only to sell more at a higher price in level 3 up in here. Okay, so you got 3 levels of rise, and currently you've now made a decline right up in here, where you've fallen out of your M pattern, right? Because if you watch Tino and you want follow the pattern, you got your W, rise up, level 1, retrace, rise up, level 2, retrace, M formation at your highs, and then you have a drop, and this looks like level 1. All right, drop level 1. So we're looking for the retrace. All right, probably around your 800 EMA on your 8-hour. Drop level 2. All right, which could come down here. There's some stopping volume here. All right, where they slowed price down before. Okay, where they can retrace back into something like this, more than likely. Who knows where it'll go, but to me, you're going to end up back down into these regions over here. Okay, so currently you're working on drop level 1. If this was level 3, all right, the thing that has me thinking that this is not all just level 2, all right, is because you got the drop. They can see like they stop hunted down before they came back up. All right, although I don't know, this could be level 2 and level 3 could be up here. Okay, it's possible that this is level 2, where it's just stair stepping up. Okay, the thing that has me thinking that is that you got this W here, and you usually, you W into your next level, you W into your next level. Although you do have a nice W here, so it could be rise up level 1, rise up level 2, W out, and rising up into level 3. Okay, but again, I wouldn't bank on too much higher than this green region up here. All right, again, we know they built longs up in here. That's what the vector candles tell us, and they even have a long up to $32,000. However, they came up into here, right, and then they've just come down. They came up into this region here. They've taken half of the region that of the imbalance there. They took a good portion of this. Okay, and in essence, the trend is down. All right, so if you want to trade the trend is down. Your momentum is up. All right, so to me, it's not exactly the best time to be making decisions for trading purposes on direction. Depends on which time frame that you want to trade on. All right, because as you can see, if you're trading on the monthly to the weekly, all right, you should be bearish. If you're trading the daily, currently, the daily, you would be technically bullish, right? The daily is technically bullish because you're back above your 200 and your 50 EMA. All right, where your next target would be your 800 EMA. So on the daily, you are bullish. So if you're looking for a day trade, this is a daily setup, and you would take the long. You've come down to support. This is a long situation. All right, you could take the long here, except I wouldn't take any trades today. When you get back below this, you're just bearish again on the daily. Okay, so there's your 8-hour. All right, watch your 800 EMA on your 8-hour. On your 4-hour, all right, the trend has started to bend. You are below your 50 EMA on your 4-hour time frame, sitting at your 200 EMA, where you have a nice W formation being formed. All right, where you got pins to the low in a multiple session, where you had it in New York coming up over the weekend. New York is issued the pin again, and you would look for a big rise over the 50 EMA. All right, that's what you're looking for. All right, if you're going to take a trade on the 4-hour, you would want to see a big push up past the 50 EMA. All right, and then wait for price to come back down and test it. All right, that's what you'd be looking for. All right, you don't want to. You could take this trade, that's fine, but just realize that if your 4 hour does do something like that, that this is possible. Okay, you would want to see you hold the 50 EMA as support. That's what you'd be looking for. So just know that as well. There is a trade here though. Sure, why not? Going to your hourly, what's gone on in the past week? All right, we got a new trading week, as you know. You got, last week it was basically a stop hunt rise, snap to the downside. On your hourly, you're sitting at your 800 EMA, and I know the 800 EMA is a big level, but look, I use this right here, and if you don't know, all right, it is the 987 EMA. I know that might sound crazy, but however, it's a Fibonacci number, and look, you got a nice long off the 1 hour time frame, off that 987 EMA. Fibonacci is a thing. Don't fade Fibonacci. All right, that would have been a banging scalp on the 1 hour time frame. 2% or whatever. It's awesome. I love the Fibonacci's. All right, so for the start of your week, we have our initial high of the week sitting at 21,895. Our initial low of the week was 21,622, set in Asia on Monday. London brought it to the downside. Looks like London built some longs on the hourly. All right, so that can give you a little clue on what they might want to do in the short term. However, it looks like over the weekend, their little trading bots or whatever built a bunch of shorts. So just know that. But also on the hourly, you do have from the prior week a bunch of longs that have been built. All right. So that's how I gauge things, but on your 4 hour here, all right, if I'm looking at the volume, at least using PVSRA, what I'm looking at here is like, see how they go short from over here. All right, they are net short. All right, and if you don't believe I'm long, right, they stop hunting you and they'll show you a long, where they'll sell to you at a higher price. They will sell to you again at a higher price, sell on you again. Right now, bang, you don't believe I'm long, I'll show you a long in level 3 where I will sell on you again. I'm dropping price and I'm dropping price, but as they're dropping price, right, they stop hunt kind of like this region right here. But again, we need a retrace. So these two candles here are a lot like these two candles here, right, where we're buying some for a retrace. And they built quite a bit. They built quite a bit of a lot of. They sold a lot of shorts, right? Which means that they are kind of long at the moment. All right. But you go over to your 4 hour, you look at the last time they sold. They sold over here at about $23,000 was the last time they sold on your 4 hour, and they are really only long on this candle. Okay, that's the only long that they've created. Okay. All they've done up here is reverse price. Okay, they have some stopping volume where they didn't come past this region at above $24,000. All right, so you got some longs being built here. So you got your momentum on Market Cipher curling up very nicely, right? Look at that nice momentum. Okay, a lot of momentum to the downside. Momentum has now flipped. You got money flow, nice curvature on your money flow on the 4 hour, on your 1 hour. Momentum is moving into your favor. However, your RSIs are split on your 1 hour. 8 hour, not looking too great actually, but your 22 hour looks like it wants to come up and meet that line. The interesting thing on Market Cipher was my 3-day. These lines meeting, waiting for those lines to meet there. As your 6-day, they are split apart. Massively confusing for that, using that. So 15-minute, what do we got? we got in the past session in Asia. All right. We set our initial high of the day. So this is our initial high of the day. So we want to mark that off. Right. The IOD. Set at 21,846. And also in Asia. All right. Where's our initial low of the day? This would be our initial low of the day right here, which is marked with our green tracer, but I like to mark it off myself. Sitting on support, your initial low of the day. Initial low. The ILOD. All right. So in essence, what do we got? That's your range for the day. This is my range for the week. Just mark it out nice. Yeah. All right. So now, what else is going on? It is 3:28, at which time Asia has run. Basically, they've blown out the channel. All right, not the greatest Tokyo channel. All right, well, Sydney kind of ran some stuff up. You got nice vectors above your 15-minute 50 EMA. All right, they've kind of blown out the channel, and Asia set it nice right in here. So let's go like this. Here's basically Tokyo, Hong Kong. I mean, over here, see how they blow out the channel? See, I'm not a big fan of that. I don't like that they did that. However, inside of here is basically where they've collected contracts and basically induced people to go long and short right at that, right at that 50 EMA on your 15-minute time frame. All right. So right now, what's going on is you got gap time. All right. If you don't know what gap time is it's where the Asian market maker is now talking to the London market maker and saying which side he has trapped, going over the books and seeing where they need to bring price in preparation for New York. All right. As you can see in Sydney, they did build some shorts down here at the psychological low, right? Where I would anticipate, to be honest, that they keep it inside of the psychological low and that they do not break the psychological low. They'll come down to the initial low of the day, right? Where I think that we're going to get a nice bounce from, all right? Because as you can see, London is vectoring down and building longs at the moment here in the Brinks. So we got some news maybe. Ancient Ethereum address suddenly wakes up. Interesting. What is that? In recent development, Ethereum address has been dormant for over 7 years, containing 100 ETH. This was the news we got over here. All right, another dormant address on the last drop. There was a dormant Bitcoin address from 14 years ago. That was the drop in Asia. They did it again. Whatever. Let's look at volatility index. Nothing crazy going on as far as BBWP. All right, you're getting some expansion. All right. I didn't go over RSI. All right, but let's just go over the 1 hour in the short term. What kind of stuff is going on our RSI? In 1 hour. You got higher highs in your price action, lower highs in your higher highs in your RSI, lower highs in your price action. So you got some bear div there. All right. To me, on the 1 hour, that's just meant to throw us off. Okay. you're currently going from oversold to undersold on your RSI on Market Cipher. All right, where it seems like money flow is coming out, but I mean, I could be wrong. In essence, I think that London is going to keep things close to the low of the week here, to the inside the psychological ranges, and in New York, you know, I think that they do. I think that they bring things up before they bring them down. So initially, the strategy that I'm trying to use for like a quick scalping day trading strategy, set by my man Steve Morrow over here, which is used in Forex. However, we see the patterns play out, and if you watch Tino, you know you're a fan of that. Is you would want to take a long from either the initial low of the day or the low of the week. All right. So, did I mark these out right? Oh, this is the low of the day. This is the low of the week. So this is actually interesting. All right, because your initial low of the week is higher than your initial low of the day. So that's actually, I'm not a big fan of that. All right. Now, where your initial low of the day came in, yeah, my green tracer is telling me that it came in here. Is that they said it here. Right at the end of New York. All right. So, checking it out on the 5-minute, look how you're coming below your 200 EMA on your 200, on your coming below your 200 EMA on your 5-minute. All right. You got your low of the week and your low of the day. So, wouldn't it be a cool little fake out to come below back down into here, right? You also got this short built down on your 5-minute. I wouldn't take the trade, first of all, because it's a red day, CPI. All right, you'd want to stay out. I don't like how they blew out the Asian channel here, right? Where I got initial low of the day is lower than my initial low of the week. They are coming down to it. I don't like that, right? That's not ideal for the strategy that I'm trying to use. All right, it's not ideal. However, not with this wick down here. Not with this wick. Okay, 15-minute time frame. Last week's low could be a point of interest. Yesterday's low, also another point of interest. All right. Where, you know, if you wanted to take a long, you would, in essence, if I wanted a long, I would do it probably in between last week's low and yesterday's low, you know, somewhere in there. Now, you got your average daily range, all right? So set at 65,188 pips. So what have we achieved today? $6,065. So I think if you wanted a long, you would wait for the low ADR. All right? Because as far as averages go, you know, you would want to take a long to where the limit is. All right? That would be where you would want a long. All right? You got some blue space in here where volume can be blown out, right? Where they can reverse back up from. All right? So in essence, if I were going to take a long, that wouldn't be a bad spot, the low ADR. Except it's very, very risky because you don't have a lot of support down here. All right, but in essence, it's the bottom of the range, right? Monthly zero support. That would be where you would want to go long, right at support, the bottom of the range. What else is good? Let's see what's going on in our bubbles. Nothing crazy. In the past hour, things are basically down. Baby Doge, huh? In the top 100? Oh my god, this fucking thing's coming down to hell. Oh my god. The past month. Ugh. This is how you know we're going down. When Baby Doge is up. What's been performing in the past year? OP, OKB, AI stuff, decentralized exchange, Trust Wallet, VC funded new blockchains. I don't know what BGB is. What's BGB? Oh, I almost didn't address BitGet token. No. All right. There's also this. So I was watching, obviously, BUSD. All right. This is Binance here. Binance BUSD is currently not at peg. It's at 0.99. All right. Looking like it wants to roll over on your 15-minute. I got alerts set because if it comes back down here, I think we're getting a big dump. All right. BNB coming down. All right. I was watching the flow between all of these. And one thing that got me interested was this USTC BUSD. All right. And the reason was I just happened to go to the bubbles and I saw Binance yesterday. The USTC was up 15%. I was like, what the hell is USTC? Right? It's a stable coin. So I put it up on there because I was wondering, I'm like, are they taking money out and rotating money out between Bitcoin, BNB, BUSD, and USTC BUSD? And it was interesting to watch. I mean, look, this thing started to spike, right? Why are they moving BUSD into USTC BUSD? That's kind of seemed to be what, money was taken from here and moved into here. What are they doing? Why did this stable coin, USTC, spike up? I thought that was a little interesting. So I'm just kind of like watching these pairs, these four as well, see what the hell is going on. So it looks like, to be honest, that things are just going to stay in this range. All right. What I would do is I would watch what London does. Okay. If London brings it down to the low ADR, that's a good spot to look for a long today, if anything. All right. 21,166. Because to me, if London brings it down to here, they would be stopping out everybody. They'd be stopping out everybody because they're going to be going long on CPI. All right. And in essence, you would have, another W formation forming there. All right. Which wouldn't be a bad long. However, on your 5-minute time frame, which is not the time frame you really want to look on, all right, you got a W here. All right. Where you'd want to see him shift out of the zone. All right. It would still be a valid structure if it came down to last week's low. All right. But this W would be invalidated if you come down to the low ADR. All right. Where you'd have your second leg over here. Now, instead, something like that. And in fact, you do have a nice little downtrend forming for them to do that. If you want to look there, you got multiple hits on this line. 1, 2, 3. All right. Where this could be a possibility. Just moving money, right? All right. You can come down into there. And then shift back up out of the zone and kind of get a little bit more momentum for a swing up into there. Very, very risky on the CPI day. Is there anything else I had to go over? Oh yeah, liquidations. Let's check them out. In the past 12 hours, what kind of things we got going on? Is this for real? Let's do that one more time. Man, a lot of why do people have so much money on the table? It's a news day. All right, so 19K, you got roughly four. It's a billion, billion and a half, 2 billion, 2.2 billion, 2.5 billion, almost $3 billion below 20K. All right. And then you got a bunch here of longs at 21.5. So where is it now? So you got, there's a quarter. That's about a half a billion. You got about another billion in this light region. All right. There's 2.5, about 2.75, about 3 billion. Another 3.5 billion. So I'd say you got roughly about $5 billion below price, and above price you got, there's a billion, there's 2 billion, 2.5, 3, 3.5, 4. Yeah, you got about the same amount as up here as you do down here. Nice straddle on your liquidations. I like it. Rough. All right. So there's your heat map. Let's go to your 7-day. Kind of gives you a better direction over the past week, what they've been doing the past week. All right. 7-day. You know, big stream down here. You got $3 billion down here at 17.5. You got another 3 billion here at 19.7, and a big. If I was the market maker, man, I would come down and want to take all this, man. It's easier considering I accumulated, and so I've been selling, right? I've been selling. Let's go to your monthly, just real quick. One last thing. Let's check it out before I let everyone go. Dangerous. $20 billion at 20,800. Up here, I mean, see how it looks different on the heat map, but you got 20 billion. Oh, no way. Look, you got 14, 13, 20, another 20, another 15, another 12, and then 10. Wow. You got a lot of long liquidations sitting above 20K. And below 20K, you got more. This is like almost $100 billion. Whereas above, again, you do have a lot. It's straddled though. You see how it's more, spread out. 13, 16, 18, 15, 14, 11. All right. And so, a lot of people are willing to take the long. A lot of people are willing to commit their money long, right? And you could be looking for a retrace. There's a nice W there. Okay. Why? You know what it is? Right over here. Okay. What was the price? This point right here. This is what you got to worry about, is that last stop hunt from back over here. All right? Where I got my alert set. Because this is your last line of support right here. All right? So 20,300. 20,400, right? 20,400, 20,800. So they could still come take this and still hold the level from this level. All right. So watch that area. This is an interesting area. You come down here. It's the last place they went long from. 20,000, 400 or so. All right. That would be a level to definitely watch. All right. Also, it is your 200 EMA on your 8-hour time frame. All right. Where you would definitely expect some type of reaction from this level. All right. Being that there's liquidations here. All right. Because normally what happens is that they take the liquidations and then move away from it. However, with price moving down like that on a red day, like a CPI day, I wouldn't be trying to catch any knives, especially with nothing catching you down here. It's just straight green bars. I know on mine it's red, but it's just straight green bars, right? I would either wait for price to come back up into this region up here, $22,500, right? Because you got your 5 EMA on your 6 month, and you also have this wick from level 3 that they previously sold off from. Okay, it's also the initial of last week's low. All right, so they don't have to make it a new low on from last week. Okay, from the initial low of last week, they hold the level from level 3. I would be looking for shorts anywhere between 22.7 to 22.5. 22.5 initially, 22,500. It's a nice hole and a half number. All right, sitting just above and in between your 800 EMA and your 50 EMA. All right, you can get a spike up, okay? Because they're not going to give you this more than likely. A lot of people are going to draw this line out and go, "I'll look for a short off this trend line at the top of the channel." Okay, where there's 3 hits. They'll probably stop price like literally just before that, and you won't get it. Okay, you won't get it. You'll get like 22.4 or whatever, right, before they snap it back down, and that'll be your retrace. All right, so be mindful of that predicament. All right, it's very unlikely. Or what's probably people got this line drawn out, right, where they're gonna look for a long up in there, right, a long up in here, right. But really, if you went short in New York last week, right, if you went short right there at the break, right, where'd you put your stop loss? Right in here. Okay, so be mindful of that as well. That's probably a lot of stops right there. Okay, right at 23K. All right, so be mindful of that this is your stop hunt region. All right, where you can get a move up to, only to come back down, and you would all want to long the retest thinking that it's going to go up, right? But really what'll happen, it'll just be an M formation back down. All right, that's kind of likely what how they would play it on CPI, but you could get the opposite. You could get a move down to here first. All right, you could get a move down here at the moment. All right, and maybe V bottom out, get the retest, and then back up. Right, you could get something like that. I would look for the V bottom though. I wouldn't look for a W. It's a news day. It would be quick. Okay, up in here I would look for an M. Down here I would look for a V bottom. Lightning bolt striking you in the head, and you guys go to the moon, and everybody's happy. All right, that's what I would look for. Nonetheless, peace out, everybody. If you're gonna trade today, trade with literally the bare minimum. You're not gonna make $1 million on a news day. What do we know? We didn't go through it, but normally price ends up back where it started by the end of the week anyway. That's the cycle of things. You're not gonna miss anything. They don't change because don't forget about, they're only allowed to change so much, per week. Nothing crazy is gonna happen. They're only allowed to move price so much. So just be mindful of that you're not missing anything. All right, and tomorrow and the next day are better trading days. So take care, peace out, and I'll see you in the next one.